So what's going on, guys? All right. So, by the way, just thank you all for the 100 likes. I will include the link to the Smooth MACD. I'll include that link down in the description of this video. Now, this video is going to be a little bit different. I'm just going to go ahead and trade. I'm not going to teach it out. I'm just going to speak it out. I'm just going to talk out loud like a crazy person and just share with you my thought process and how we do things. Okay. So without further ado, let's go ahead and look at ES. Now, I made my money on this move. I also played CL and I was waiting for NQ to develop a move here. Okay. So looks like everything developed a move. We got the 4 out of 6 confluences. And so we had consolidation with NQ until we got the trade design down. And of course, we have a level and the 200 here. Okay. And so what I'm going to do is I'm going to hide the office really quick and I'm going to just look at this for what it is. Now, we have the smooth MACD. Again, I'll put a link down in the description, which showed you that there was the bulls were losing strength. That's really what this meant, right? It doesn't mean like immediately we're bearish. A lot of people use the MACD in a very binary way, right? So we cross up, oh, we're bullish. We cross down, oh, we're bearish. No, it's not true. It's we could see this as a measure of strength and momentum. We're not bearish technically until we break below the 0.00, right? This is bearish territory. It can prepare you and it can lead you in. And of course, when you use our system and multiple confluences, it definitely tells you the story of bearishness. We see this happen right around here. We could see that happen there relative to this move here. We could see that, right? And then, of course, we have a cross here and we have a trade design to the upside here, right? And then, of course, this develops and moves on up, right? We get the GT flip, gives us greater confidence. And then alongside with that, we have the MACD right here, which develops and gives us greater confidence as well. Now, we do not trade pre-market. However, I'm showing you structurally how the system works. And then, of course, we would have our checklist. So we're looking at NQ. Now, the question here is, do I go against the trend here? A lot of traders will go ahead and become contrarians at this point, right? And say, okay, well, it went up, it came down. That's a very aggressive candle. And so therefore, I'm going to play the bounce. Now, the bounce can't happen until we get a close, but we have quite a few bits of confluence here, with the exception to the 1 hour band and the 200 EMA. 200 EMA, we have not crossed below. So technically, by definition, we're still bullish. And then, of course, our MACD here is above our center line. So technically, we're still bullish. And so this for me, I would have to say, instead of like deciding on this one candle, if I was betting on my confluence here, if I was betting on my confluence here that we're trending down, right? I would do the bet with minimal risk. And what would I mean by minimal risk? I would sell and I would come to the other side of this level here and I would leave it there. And then what we see is we see structure right here, guys. We see the wicks here. So we got some structure there. So for me, I wouldn't overstay my welcome. I would just set my buy order just shy of the level. And then, of course, the wicks, right? And we let the trade happen. Now, we would definitely love to see the break of this level to come on down. Let's go on over to ES. Now, ES is definitely making its move down. We got to see, where are we? So we're just shy of a level. There is another level here. If we turn on our office here, we could see that there is a little bit of a resistance or maybe even awareness that price is coming down to the 200 here. We have to be cautious. We have to say like, yeah, maybe we're not going to come on down, but if we are, well, we'll be ready. Now we got a whole new candle. This is awesome. It's a whole new candle. If we are bearish here, we got 4 out of 6 confluences. Maybe we wait for the candle to come up and retrace on up to the band here, and then take it down, right? We have a very, very healthy MACD down. So maybe, just maybe, we go ahead and we go short once it comes up into the band. Okay. Now I'm playing conservatively. I am up on the day. I'm just really showing you like we gotta play the trend, right? That there's 4 out of 6 of the instances that say we're bearish, so therefore we shouldn't be bullish, right? Stop fan, here we go. We have it here. It did not fill me. It just did not fill me here. It insisted on going short, but I believe NQ filled me. And let's see what NQ's doing. NQ filled me, came on down. Looks like it found itself above the level once again. But I do believe that this is coming on down. Now, because we're in the zone, because we're in the zone right here, and because of that level, I traded really small, 3 NQ contracts, right? Very, 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 very small. And what this has afforded me to do is, once again, like what we saw with ES, if it comes on up to the ribbon, I can scale in, get a better price with the assumption that we are coming on down, right? So what I can do here is I can order filled, add 3 more. So therefore I'm 6 contracts in. I have a scheduled full allocation of 15 to 20 contracts. Okay. Now, what this is going to do, and I just removed my buy order because it's just 3 contracts and not 6. What this is going to do is, one, allow me to exit. Should we not truly develop straight, it will allow me to exit before the level, slightly in profit, and maybe cover some of my fees. That's how I'm thinking here, right? If we come back down to the bottom of that wick, then maybe we're profitable. Now, this looks like a scalp. This looks like it has no rhyme or reason, but it absolutely does. And you'll see. So we're going to go ahead and let this trade develop. Again, guys, we're up 4,500 on the day. Looks like we're down $270 on this trade. That is just whatever. We're really not caring about that. Now, what this also highlights is the power of our 200 and the power of VWAP, right? We haven't broken the 200. You see that there? There's power there. You have to respect it. That's why it's part of the Confluence checklist. Okay. Now, yes, I am sort of kind of being cute with my trade, but I know how to walk away from my trades and I know how to kill a trade. And honestly, honestly, I'm up this month. I really don't give a rat's ass. Okay. So what we have here, we got a bit of a retracement coming up into VWAP, coming up into to the band where we got a bounce, right? And what this does is, because once again, I am not fully entered or scheduled into this trade, right? I'm not fully entered based on my schedule, but I'm attempting to enter with 15 to 20 contracts scaled in, right? Now, this isn't dollar cost averaging. This is scaling into our allocation. This is what institutions do, right? I'm scaling my allocation. I'm not doubling down or tripling down or exposing myself to more risk than I need to. And so what we can see the view up there. You know what? We could go to the build here. And so now this rather aggressive candle, I have the opportunity to make some money should we get an aggressive move back down to this level. Okay, because we've got 1 touch, 2 touch, we got structure there. Okay. Also, what it affords me is the opportunity to exit on a retracement, right? So we all know how NQ likes to act like a crazy person. What this allows me to do is minimize my losses. I know it sounds crazy, right? But that is the beauty of simply just scaling in bit by bit, as opposed to scaling in with a full size allocation. Okay. Here we go. We're going to make this trade profitable any which way. And what I love about the system is I have an objective exit here. Is an objective exit for me, that will be VWAP right there. We get break VWAP. I can go aggressive the other side. Okay. Now, what I want to share with you guys, full disclosure, let's see if we can bring this up here. This is September 1st, all the way up until now. And these are my stats. 1.69 risk to reward, 70% win rate. And so we also got ChatGPT go ahead and analyze my trades. And we'll go over that in a second. But utilizing ChatGPT with my journal, it's something I do, and it's something that allows me to get better as a trader and be honest with myself and look in the mirror, right? So as it stands right now, this trade was profitable. Now, I can't be greedy in this trade. Now, the reason why I can't be greedy in this trade is because I'm already oversized relative to my initial entry, considering that I did not take an A plus setup. Does it make sense? I hope that makes sense, right? Because I scaled in and oversized my entry, not relative to my plan trade, but relative to I'm 3 times in, right? I started with 3, now I'm with 9, and I'm only down. Okay, so I'm profitable here. This is what I have to start doing. I no longer think about, oh my God, how much money could I make because I'm 9 contracts in? It might come down to the 200. I'm immediately thinking about, okay, we get 9 contracts in, and I need I need to start playing with my stop here, right? So here we go. I want to, there's a fine line here, right? So we're up $500. We're up $800, right? $1,000. That's nearly a quarter of what my P&L is, right? I'm just going to do that. Now my trade's free. And then what I'm going to do, we have that level there. I suspect that it will react to that level. This trade went from risky business to absolutely free. Do I care about this money? Hey, look, it's $1,000. It's $1,000. It's $1,400. At the end of the day, I have to respect that I had a shitty entry because my entry wasn't way up here. We are at a level and we are approaching the 200. And so that's $2,000.
Order fill.
That right there. Right. Sweet. That is my trade. And look, we got the wiki wick right there. But I did not go contrarian here. I did not go contrarian here. I am going where the system is telling me to go, but I also have to respect my 200. It's a freaking level. Plus, we got these levels here. You guys see this here marked in like magenta, pinkish type of color there. Those are my levels. And so let me explain what I did. Okay. What I did was I treated the trade like I'm going shopping, right? I treated the trade like a reseller, if you will. So when I went to the market, I bought a can of beans for $5, right? I bought 3 cans of beans for $5. And then I have the intention of reselling for a profit, but that was just a little bit too high. So then I saw an opportunity to get it cheaper. And this time maybe saw an opportunity to get it for $3. And so I scaled in. And then I saw an opportunity to get it even cheaper than that at 250. So what ends up happening there is that my original $5 just got cheaper and it allows me to resell. So because I averaged down, it gives me a competitive advantage. I want you to think about this. What does Walmart do? Walmart sells in volume and they buy in bulk, right? And because they buy in bulk, they're able to get the better average price, DCA, the better dollar cost average, because they're buying in bulk. And so in my mind, I'm like, okay, well, if I could get my average down to, let's say, $3, I could be profitable at 4. And of course, everybody's going to want it at 4 because it's cheaper than 5. Makes sense? Yes. Right. Now, that is just a general idea. Of course, we were going short, so it's kind of hard to explain it going short because the brain is just not wired that way. But I averaged down to 3, so I could sell at 4 and have the better deal. Obviously, other buyers are ready to buy. This is a market. That's what it is. Okay. And so when you think about FOMOing into a trade, you have to ask yourself, do I have buyers up here? We obviously have buyers below. So maybe I go ahead and get some buyers below, buy it up, sell higher. Okay. It's a market. That's why they call it a market. It's more than just candles and, technical analysis. It's a whole lot of common sense in trading. And so I apply some of that common sense in my trading. Hey, look it. I am a student of the game. Let's talk about what ChatGPT and thank you for dealing with me for 16 minutes. Let's talk about ChatGPT and what it says about my performance. And so I do this to stay honest. My gross P&L is 80,000, very strong for 10 days of September. 56 trades. That's 5.6 trades per day if trading daily. And yes, that is the case, but it's treating every dollar cost average into a trade, right? So you guys saw me do 3 entries. That's considered 3 trades. So it's much less than that, right? My win rate is 70.69%. That is customary of the trade 1348 system. You go ahead and check it out at trade1348.com. It's customary of the system, well above the 55%. My profit factor is 4.63. Anything above 2.0 is considered excellent. And I have always suggested that I'm a very strong trader. And then we have average win loss, 2,500 to 1,400. Solid 1.7 to 1. So it basically means that 70% winner, 1.7 to 1. I have a trading career, right? Even at 55% winner and 1.5 to 1, you have a trading career. Now, trade distribution, 41 winners versus 15 losers. Yes, I do lose. Good consistency. My equity curve, generally smooth on upward. Only a few dips. What if you guys want to read this with me? There we go, follow along. Only a few dips, big pushes in early and mid-September stand out. Okay, so let's talk about the big pushes. Now, my big pushes happen after I accept my loss, and then I see there's a recalibration in the market, and so therefore I have a big push. I go in, I go in hard. Whoa! Oh, yes. Okay. How does it grade me? Let's go ahead and say, your profit factor, win rate, equity curve also suggests strong execution and risk management. That's something I preach. We say, okay, the only reason not an A plus across the board is that the average loss size, 1,400, is a bit higher than ideal relative to your win rate. If you can tighten that up, performance becomes even more bulletproof. Okay. So that's what I'm going to be focusing on in September is tightening up the losses. That's really it, right? And one way to do that is to scale in 333. Okay, so before I was scaling in much larger though. It was like 555 or 666. Damn it, six. Okay, someone just throw some holy water at your screen right now. Just holy water. Okay. Anyways, in short, bottom line here, this is professional level performance. You're managing risk well, keeping a high win rate, and compounding effectively. The only real improvements will come from trimming average loss size and ensuring only A plus setups to get your capital. Okay, so let's talk about this because going against the 200 here was not an A plus setup. In fact, this here would be shaping up to be an A plus setup. Okay, going with it is shaping up right. So what we need, we need the GT flip, right? We need basically a 200 EMA, but this is bearish, right? But we need Confluence's bullish because we bounced from the 200, except for getting smacked by VWAP. Anyways, look, you guys, that's me. What I made 6,700. Yeah, that's the par. That's on par. Yeah, close out the week up 100K. That's or I could do that today if I chose to, but I got things to do. Gotta help my brother out. Anyways, guys, hope you enjoyed this one. Signing out. Peace.